Hi traders, and welcome to Pepperstone's technical analysis wrap on Friday the 14th of August. So we've seen some consolidation in some of the majors this week. The last few days especially has seen a couple of the big ones, the EURUSD, the pound USD, and even the Aussie USD to probably a lesser extent, finding a bit of a consolidation period. They haven't had big ranges. We'll jump straight into them and see if we can identify any shorting or longing opportunities in the shorter term throughout today and maybe early into next week. So we'll start out here with the Aussie USD on the daily. We can see that the range, we'll blow it up a little bit just to give us a bit of an idea of what we're talking about. The last 4 days of trading, or even the last 5 days really, you can count today's, has been a very, very tight range. It's been resting around the 20 moving average here on the daily. You can see the range has been about 90 pips. It hasn't been any higher really than the, we'll call it the 71 sort of 90 area. And yeah, 71 nearly flat has pretty much seen the bottom. So it's been a very tight range, and you can see after such a big move up to get to this area, that's a very, very flat week, almost the flattest week we've had in a very, very long time. Obviously, that shows the indecision that is at this point in time with the Aussie dollar. It has been correlated to the S&P 500, which has shown a little bit of strength this week. It's had a lot of green candles, but this one's not so certain it's going to get past the 72 cent in a big hurry. So what it's done is basically created some good trading opportunities on the smaller time frames. If you were scalping this on a 15-minute chart or even on a 1 hour chart, you've certainly had some opportunities. And that's, I guess, the highlight really, when you know what you're looking for in terms of a range, which it certainly gave us. The opportunities are there on the smaller time frames to basically short and long those zones and basically trade into the resistance at around that sort of 172, or the 0.72, sorry, and down to the 71 cents. So it's a 100-point range that you can certainly get some decent trades, and you can see that we're getting a series of lower highs and lower lows. We've got a series of higher highs and higher lows here on the 15-minute. Nothing to write home about. Obviously, it's got moving averages in front of it, but they're all little mini ranges of support and resistance. You can see this area here at around, and no surprise, it's in the middle of a zone at 71.5 cents. Has proven to be support there when it broke through, went down all the way to the bottom of the range, and now it finds itself, trying to get back up there again. If it gets past that little zone there, above the 200 moving average, you can probably just scalp it into the higher range. But until this breaks out of this 100 pip range, it's nothing really to write home about. You don't want to be shorting it or longing it with any conviction for a longer term trade unless it actually does a significant break of those zones. And by that I mean a 4 hour or a daily close either above the 72 cents or below the 71 cents. Then you can start looking to the next ranges on it. But until then, probably just scalp it in this 100 pip range and just trade the mini trends inside the bigger channel. So we'll pop on to the US dollar CAD. Basically telling us a similar story to what it was. It's been a pretty solid sell-off this week, really. Like we can see, this is the daily chart as well. It sold off pretty close to the 20 and has been negative ever since. Flatlined a little bit this morning, but again, look, the MACD divergence is still there. Stochastic divergence is still there. Still a significant zone for it, so you've got to be mindful that it is selling into a pretty serious support zone now. It doesn't seem to be wanting to stop, but that said, we'll look at the dollar index strength in a second and see what that's telling us about this. But on this one, we probably want to be, I'm not a big advocate for trying to reverse a trend, as you know. So what we want to be doing is, the only way we're going to try and long this is if it has a change of trend on a 4 hour, or even probably 1 hour at the very, very lowest time frame. But we want to be seeing a series of higher highs and higher lows in the 1 hour, then switch it to the 4 hour, make sure it's doing the same thing. Until that happens, I'm not convinced this is going long. The obvious long is into the 20 moving average on the daily. Okay, so around that sort of 133.50 area would be your target. So it's certainly got some range there. I mean, it's only at 132.20, so it's got about 130 pips that you could potentially long into if we get a change of trend on the 1 hour and the 4 hour at this zone. So we know we're at support. So we just want to really let price dictate what we're going to do here. From the short side, if we're going to take it shorter, if it does continue to break down, it's got a little bit to go before it gets to the next one. It's around that sort of really probably 130 is the real. I'll take it out to a weekly to get a really good idea as to where we're going on this. And you can see that the 130 zone is the next serious level of support. So if this level does break down, I'll pop it right on the 130 to show you what I mean. We've got support here, obviously, support there. It was resistance there. It played the game at all these levels. So, you know, the other thing we've got in our favor on the weekly is a 200 weekly moving average that's catching it at the moment at around that sort of 131 sort of 50 zone, still a little bit lower than where it is, but certainly something to keep in mind. Okay, so it's got a little bit of work to do to get to that point, but if it keeps breaking down on the daily, that's our short target. But I would probably, the preferred trade here would be at least a reversal around this area and get it back to the 20 moving average of around that 133.50 area on a daily. Okay, so for that, we want to see a change of trend on the 1 hour and the 4 hour. So we'll move on to the dollar index now. So that's telling us a little bit more of a story of the dollar strength for the week. We've seen a little bit of it, so we will jump into those ones as well. But this is, first, let's look at the dollar index daily. You can see, got a bit of a hammer candle that formed yesterday, tried to sell off. It certainly picked up a little bit towards the end. Didn't quite get to the 20, but got pretty close. And it's a bit of a, pretty much the same range that it got last time, which is about that 93, 92 area. So, interesting one. Look, MACD still says it's got potential to go up. And for all intents and purposes, as long as it doesn't break down below this low, it is still trying to make a series of higher highs and higher lows. So what we want to see now, ideally on the daily, we want to see price break through the 20. I know we've been talking about it for a while, but we can't take this seriously until it does. When it does eventually do that, it means it'll be above the 20 at that point. You can assume if it happens in the next few days. If it does that, it's going to make a bit of a difference on some of the dollar strength pairs. There's no question about that. And that will coincide with some pretty key reversals on the Swissy and the US dollar CAD and the US dollar yen for that matter. So what we really want to see here is the ideal trade would be for a daily close above the 20 moving average and above this level here. When it does that, it definitely confirms the change of trend on the daily, which is a really important zone, because after that, we've got very clear movement all the way up to around the 95, 50 to 90. Even this area could probably provide a little bit of problems for it at around the 95, but really the 95, 95, 50 would be the next target. And that's a pretty big move. And that would signify a pretty big move on the US dollar base pairs. So this is really one to look out for. Even if you're not trading this one independently, keep an eye on it, because when this does, if it does get up here and close above the 20 and this zone on a daily chart, it's going to prove to be pretty interesting and important for the US dollar base pairs. So that is where we're at with this one. So we'll move on to the EURUSD now. That's you can see here it tried to make the new high last week, failed to do so. It's pulled back now. It's been a bit of an up and down week. The ranges have been fairly tight, as you can see. We've got a 118 sort of, call it 65 area as its high, and then we've also got the sort of 117.06. So not a huge range considering what it has been doing recently. So it's certainly consolidating around this zone. We know it's important. Probably one of those ones where it still looks like it could get to 120 if it breaks this high here, but if it breaks down below the 117, which is obviously a key zone for it, it means it's broken down below the 20. Next point of call is definitely around a pretty solid sell-off. There's not a lot at the 116 and 115 really. So if it does break down below this level here, below the 117, you'd think that the 114 to 114.50 is going to be a very easy run for it to go to the downside. So around the 120 as its high and around the 115 for a slow. But until it breaks this zone, this sort of 150 to 200 pip zone with a considerable close on a daily chart, we're not going to really do that. We're going to go to the smaller time frames, and we're just going to basically play the ups and downs into these ranges. You can see that the highs are here and the lows are down here. So anything in between that range is going to be pretty fair game for scalping opportunities, which is good. So that is the best way to play this one at the moment until it gets a daily close below or above these two black lines. Just basically scalping opportunities in and out of that. Can go down to now that you've drawn that up, we can go to a 15-minute chart, and you can see there are plenty of scalping opportunities. You can see basically even if you're just trading the 20 moving average on its touches, you're going to get pretty good results. So it's right in the middle of the range at the moment. If we take this out, you can see that there's a fair bit of movement in it. So it really just shows you that even in a ranging market, it gives you good scalping opportunities, okay? So basically look for a change of trend on the smaller time frames and trade it into the lows and into the highs for scalping. And yeah, look for the big breaks for a longer term direction. But for now, we'll just trade this zone. All right, the pound, we'll have a quick look at it as well. You can see it's been very, very consolidated over this week. Very, very low movement. After that big breakthrough a couple of weeks that we had through here, it's been a week and a half of pretty much nothing. Okay, very low ranges. You can see 31, sort of 30, sort of topped it out. The bottom is around 30, 130 altogether. So really, you know, again, you've got about 120 pips of movement there. You play that one the same way you're playing the euro at the moment until we get a clear and definitive breakout of either the 132 level on a daily or a break below the 129.80. And which would also be a break of the 20 moving average at that point. No long-term ideas for this one until it does that. So let price action be your guide. It's the most important thing really when you're looking at these. You want price action to be the absolute guiding light because it's the best indicator there is. And but until that happens, set your alerts for those levels for dailies for them to close there. But you get really good scalping opportunities inside that channel on the smaller time frames like the 15-minute and the 1 hour. So just trade the 1 hour and 15-minute charts with patterns inside that channel until we get a definitive break. And again, yeah, just let price action be our guide. All right, the last one we're going to look at today is the ASX 200. Like this is the one that it's certainly been, you know, it's been in a bit of a zone as well, obviously, but we've seen a little bit of a sell-off. The key component here is obviously we've got tops here that have been basically MACD dropping for the last, you know, several weeks now, like, you know, right through May, June, and July. Now, what we can see, I'm going to blow it up a little bit because it was quite significant. It went smack bang into the 200, tested the 200 there, sold off it, came up and tested the 200 again, could not hold it, and then we saw the big sell-off candle yesterday off a really important zone. Now, we all know how important the 200 moving average is on a daily chart. So, you know, it's obviously 200 days of movement being averaged out. So it's no surprise, you know, we've seen in history that it's obviously a really, really important zone for it. So it's going to provide pretty significant resistance as it did. How you would have traded that? Now, I know a lot of people did trade that because I got a lot of emails saying that, yeah, where's it going to go to from there? Well, it pretty much landed where you'd expect on the 20, but you know, it's still being dictated to somewhat by the S&P 500, but it's getting itself caught up in this range. Now, you can see that the moving averages are starting to all converge on each other. They're going to, the 200 pulled it up, the 20's holding it up from the bottom, but MACD is dropping. So, yeah, momentum is starting to shift. It's consolidating here, okay? It knows that, yeah, that 61, between 6,000 and 6,200 is a pretty significant zone. How you would have entered this, though, you know that the 200 is there. So the best way to identify trades like this is when you know that there's an important level, like it was there the other day, you draw your horizontal line, and then you go to the smaller time frames and look for the important key components of that. So you can go to the 4 hour. You can see here that we've got, you know, basically a double top at this level. It's gone broken through the neckline. It's come up and tried to test it again there. It is trying to test the neckline as we speak. Go to a 1 hour. You can see basically the same thing, the double top at that important zone. Okay, you can see a bit of a retest of it, but probably just as importantly, if you actually want to scalp it, you've got to go to the smaller time frames to get your cues as to how to trade this. And then, you know, on a 15-minute and even the 30 minutes to an extent, you can see that these zones are all lining up, and you're looking for the breaks of the key moving averages on these, because essentially what you're doing is scalping it. You know, you haven't got a lot of range there. You're probably only going for 100 to 150 points. So the best way to play it is to go to the smaller time frames and look for the signals. Okay, so you can see we've got, you know, what looks like a double top there. You got MACD divergence. Okay, a breakdown of the moving averages. That gave us a pretty late entry. But if you go to the smaller time frames, you can see that, yeah, even though the MACD was dropping there, once price broke through the 20, came back and tested it again, that was pretty much a sell zone. Once it got past this level here, that was a hard one to get. But even if you got that 15-minute candle, if you missed out on that one, you know, you could basically enter this trade because you know you've got a key, you know, price break of the moving averages. We know that it's at a very key point of resistance on the bigger time frames. So the pressure is definitely to the downside. So that's how you basically trade this one. You want to be doing the same thing when you go to a 1 hour daily. Sorry, you can see that it's a lot of traffic in front of it. and that's how you try to get into that. But you know that the zone it's going to go to, or it's going to gravitate to pretty much straight up, is the 20 moving average. So what to do with it from now? It may test these tops again. If it does, potentially look for selling opportunities from that zone. But if the daily does get below this 20 moving average and closes below it, that's around that sort of 6,000. That's when we're going to potentially see some action into the fives again, maybe into the 5.9, 5.8. But a bit of a wait and see on this one, just like everything else really this week. Wait for a daily break of either the 200 up the top here, so around that sort of 6,200, or a breakdown below the 6,000 on a daily chart. If we get that, then you can start looking for the bigger movements. But until then, just trade the 15-minute and 1 hour mini changes of trend inside that zone, and you should get some good scalping opportunities. All right, so I hope everybody's had a great week's trading. We've seen some consolidation in the bigger time frames, but certainly some good scalping opportunities in the smaller ones. So hopefully you took some advantage of that. Hopefully we'll see some good movements next week. We are setting up, once these zones do get broken, we're going to see some good trends start up again. So we'll certainly keep an eye on those. So I hope everyone has a great weekend, and I look forward to seeing you all next week.